PayPal stock is down about 15% this year. Guys, even worse, its all-time high on July 26th of 2021, a mere 2 years ago, was $310 per share. It is now at $63.82, and its low was just a few weeks ago at $57.29. Is this company sucking, and that's why the stock is down, or is it a mispricing? Guys, every investment is the present value of all future cash flow. But more importantly, stocks in the short run are a voting machine. In the long run, they're a weighing machine. So the question is this the voting machine saying this stock is poopy, or is it not? So in this video, guys, we're going to go over a lot of things. We're going to have things for beginners, things for more advanced investors, and everything in between. So watch the entire video. We're going to pull our community members. They have commented on this company. We've asked them for their bull and bear cases. We're going to go over some analyst estimates, of course, our 8-pillar process. And we're going to cap it off with probably the most important question everybody's asking is, what's the right price to pay for PayPal? Guys, in full disclosure, I own PayPal. Don't go buy PayPal just because I own it. We are here on this channel to teach a process, but I want to have full disclosure on my holdings. I own 12 stocks. PayPal is one of them. I like them at lower prices. I fully expect PayPal to go lower from here. I actually hope they go lower from here because my goal is to buy what I consider to be a continually growing company at a cheaper price. So let's go check it out by looking at the company. It is a $71 billion market cap business. That means that if you wanted to buy every share in the market at $63.82, you have to spend $71 billion to own every single share outstanding. All right. Their profit margin, Mo, look at this, very consistent. 5-year average, 14.1%. Last year, 14.3%.
Yep.
Very consistent business. Now, current PE of 17, which is a little bit higher than the historical average, and a 5-year PE at 22. Guys, compare this when the stock was 5 times higher.
Well, that's the funny thing. Like, I was looking at the profit margin and going, the stock was at $300 a share.
$310.
Obviously, profit margins were pretty consistent.
Yes. In fact, revenue was lower.
What happened?
Revenue was actually lower. All right, no dividend paid in this company, which I like.
Yes.
Because their goal is to reinvest the money. Now, their reinvestment rate isn't the best. Their 5-year return on invested capital is about 9.6%. What this means, when they invest money in the business, this is the return in the last 5 years they've gotten on average. Seems low, but remember, with growing businesses, it can be skewed lower because the net operating profit as they try to grow can be a lot lower because they spend money in advertising, acquisition, etc. Now, their last year return on invested capital is a little bit better, 11.2%. This could be a sign of good times. Now remember, PayPal was started by Peter Thiel. It was part of eBay and spun off 10 years ago or so. So this is a company that's spun off. I literally was talking to somebody the other day where they said, PayPal is not a growing business anymore. I said, wait, what are you talking? It was on Twitter. Somebody on Twitter was commenting. I was like, what do you mean it's not growing? Paul, look at their stock price.
Oh my God.
Hang on. There's a difference between the company growing and the stock price growing. We want to focus on what is the company doing, and then can we pay an appropriate price for the company through the stock price to get a good return in the future. All right. So let's go look at their 8 pillars here real quick. So guys, remember, if you're in our community, you can customize the 8 pillars, up to 12 different pillars and 4 quadrillion different variations. But Mo, only 1X here.
Yeah, looks pretty good.
The cash flow is taking a big hit. Why is that?
Let's see.
Now look at the cash flow here, Mo. Their 5-year average free cash flow is about $5 billion, and the last year was 3.66. So it has taken a hit in the last year. It has absolutely taken a hit in the last year. Let's go pull up the cash flow statement. Remember, free cash flow is cash from operations less your capital expenditures. That's the money you invest into the assets of the business to grow it or maintain it. All right. And there's 5 things you can do with free cash flow: buy back shares, pay a dividend, reinvest back in yourself, make acquisitions, and pay down debt. All right. In the last 5 years, it went from that's the big reason right there, 7.2. Mm-hmm. Now, they've had fluctuations in the past.
They have.
So maybe this is temporary. But as you can see, even their most recent drop to 3.66 is way higher than they were in the first from 2014 to 2018. So that's a good sign. Their new level might be higher. So the question you have to ask yourself is, can I pay a reasonable price today for PayPal, where even if they grow, which they are growing, and we'll show that, it can still make sense even though cash flow is down right now? Is it temporary? Because look at their revenue over the last, look at this revenue growth, Mo.
Yeah, it's huge.
Now, obviously, it jumped up for COVID.
Right.
From 16.3 to 19.2 to 23.85 to 26.39 to 28.5.
But it's also still growing.
It's also still growing.
And the thing is, like, we see a lot of these companies that had a jump from COVID and then now they're declining.
Yes.
These guys are still growing.
But again, can you pay a reasonable price for the company? That's what's key. Even though you should pay more for a great business, it doesn't mean you should pay whatever price. And that's a big thing we try to accentuate in our community that our community members have now started to understand. And they have been understanding for a long time. But that's really important. And that's the reason why in our community, when people have, the more they learn, the less they fear. And we have a lot less fear in our community about investing because it's about sitting there and saying, okay, if I understand PayPal as a company, and if I think it's going to be bigger 10 years from now than today, can I pay a reasonable price today where as the fundamentals get better and better, the stock price will follow? That's the big key. Because the stock price has gone terrible in the last, look at the last year.
Yeah.
In September of last year, the stock was $100 a share. I owned 0 shares of it. I owned 0 shares of the company back then.
It's incredible to see their profit and revenue over the last year.
And it's still gone, the profit and revenue both, well, the profit hasn't gone up, has it?
Net income in fiscal year 2022.
Oh, wow, it was.
$2 billion and it was $4 billion in fiscal year 23.
Wow.
Double.
Look at that. But the cash flow is lower, but it's still,
yeah.
That's incredible.
Now it returned to 21 levels, but well, not really. But
so Mo, what's our community saying? So in our community, we always ask our community members, what do they think about certain investments we're going to make videos on? So here's our PayPal chat. So why don't you pull up some of the best comments in there, Mo? And we're gonna do something, guys. Those in our community, we're going to start giving away a free t-shirt to anybody who makes the comment we like the most for our community members, okay? Tell us some of the best comments here in our PayPal chat. Because there's a lot of activity in here.
Yeah, there's a lot of activity. There's a lot of long comments, which is great. The one that I like the most here, this is from Raf. PayPal has a strong position in the fintech industry with leading brands such as PayPal, Venmo, and Braintree.
So let's remember, they own Venmo.
Yeah.
That's a big thing. They own Venmo.
They have a reputation for security and reliability.
Expand on that one, Mo. What have we talked about all the time about PayPal?
When you buy something from really anywhere that's not Amazon, basically, you are using PayPal. You're paying through PayPal.
And it's secure. They're very pro-customer, and that's what I like about them. Keep going.
They're growing its active user base.
Absolutely.
Forward price to earnings ratio is below its historical average.
So I will disagree with Raf on this one. I never look at the historical multiples of a company. I just look at the multiple I think they... Yeah, because look at Tesla. Look
at PayPal.
Yeah.
You know?
But look at Tesla. Their historical average has been 200 times earnings. Does that mean that 100 times makes it a good deal?
Yeah.
I don't think so.
Yeah.
So go ahead.
They have a loyal customer base. That's absolutely true. Low dependency on any single supplier.
Yep, that's true.
Now, competition, Apple Pay, Cash App, Stripe, Square, they're not in the same realm.
I think those are competitions to some things. I don't think Apple pays. I don't think Apple pays. To me, Apple Pay is just a quick way that you can use what you currently have to pay.
They're a competitor to Venmo and Cash
But even
App.
then, do you use Apple Pay to transfer money to friends?
No, but it is competition. It's the same concept. You just send money.
Okay.
You know, PayPal faces tough competition and other fintech players that offer similar or alternative payment methods, with some having strong brand recognition.
So you know what I love about this comment from Raf? He brings in both bull and bear cases here, right?
Yep.
And Keenan, he talks about 11 forward PE, 5 to 10% year-over-year revenue growth, active users growing. I agree with you, Keenan. And Siakris's biggest thing right now is the big pie of the transactions. That's what I like. They are ingratiating themselves in a lot of transactions going forward. People feel comfortable using them. They use them a lot. I use PayPal whenever I have any sort of purchase with any other vendor, like you said, besides Amazon, because I want the security of knowing if I'm getting scammed, by some chance, if I get scammed, I'm safe.
Yeah, I actually like it because I know I have American Express, which is my credit card, and if that doesn't work, I can go to PayPal, and if that, it's just another layer of protection.
Yep.
A couple of bull and bear cases here. The total payment volume grew 11% in its most recent quarter, while transactions per active account saw an average of 54.7 on a trailing 12-month basis, increasing 12%. People are continuing to go to PayPal.
So let's do this. So Mo, who are we giving the shirt to?
So let me see here. I'm going with RAF.
Yeah, I agree with you. I think Raf had a.
I really
and
like
by the way,
way
that's
you
not to
broke that
criticize
down.
anybody else says. It was
Nope.
great comments, but we like that Raf jumped on it. And so, Raf, this is your shirt. You're gonna win. Reach out to us. We'll reach out to you. We'll have one of our members, or
And here's another shirt we have in the store.
Paul loves Kathy Wood. So, guys, if you like this, you can check out our store at.
Everythingmoney.store.
So check it out. Everythingmoney.store if you want some of their stuff. So let's see what analysts are saying about PayPal. Mo, look at this. Analysts are expecting $5 per share in profit today, which is 12 times, essentially, earnings today, going to $9.22 by 2027. Look at this growth. Double-digit growth.
That's big.
Let's look at revenue.
Pretty big there, too.
Analysts are expecting 5 to 10% a year here. $30.29 billion this year, going to $46.7 billion in the next 4 years. Guys, to me, this is a prime example when I see people on Twitter engaging me saying it's not a growing company, they're focusing on the stock price. To say the company is not growing means that this would be declining. This is not.
And I don't think that's necessarily a bad thing if you don't know. If you don't know that you don't just look at stock price, we're the channel for you then.
Yeah.
Come and learn of why we're saying that.
If this doesn't make, if you're like, wait a second, I always thought stock price equaled the company. No, in the short term, it does not. In the long term, it does. Yep. All right, so it leads us to our final question. What price to pay for the company? So we have our stock analyzer tool. It's been used over 2 million times by our community members. And guys, if you're interested in learning about our community and how you can join, click the link above here. It'll take you to a video where I'll explain the community and how awesome it is and how you can join it. So Mo, let's pull up the last time we did PayPal in our history. So I pull up our history, go to PayPal, August 9th, 2023. I'm gonna pull it up at 9:32 a.m. I'm gonna pull it up and we're gonna see if our assumptions are still what we wanna do here. So we did a 10-year analysis. The first line is revenue growth. Mo, we did 4, 7, and 10. How do you feel about that going forward?
Yeah, I have 4, 8, and 12 in my own. I do think that 4 is very low, but let's say that competition swoops in and
let's say 4, 8,
beats
and
them
12.
up. Yep.
Because I think even on the analyst side, and by the way, analysts have their biases, but even on the analyst side, they were expecting 8 to 10% revenue growth for the next 5 years. And I truly believe that this is a company that as the world gets bigger and bigger economically and gets more and more advanced, PayPal will be more and more useful.
Yeah.
Profit margin.
So I did 12.5, 14.5, and 16.5.
So we did 12.5, 16.5, and 20.5.
Interesting. Okay.
And the reason was we saw the earnings per share increasing a lot.
Yep.
And it's a very high margin business.
Yep.
The margin was, let's see what the gross margin is. And I'm going to explain this to people here. Our gross margin on PayPal,
14.3%.
gross margin,
Oh.
48%.
Whoa.
This means every extra transaction they do, guys, adds 48 cents to the bottom line to pay taxes with. So 48 cents of every single thing, which means that their tax rate is 30%. They're basically netting 33, 34, 35% of their bottom line. So as they add more and more revenue to their transactions, they're not going to have to add as much overhead, which means they can add more to the profit. That's why I did, because remember, they're doing 14.5% now. So for me, them going from 14.5 to 16.5 is not a big leap.
Right.
But if they have more competition, they start to falter, 12.5% is a reasonable estimation.
Yeah.
What'd you do for free cash flow? Because if you notice here, guys, the free cash flow is basically always higher.
Yeah.
That's something I like about PayPal. Their free cash flow in the last 10 years has been 21 to 22%, but their profit margin is 13 to 14%.
So I had 17, 20, and 23.
I had 16, 20, and 24.
Okay.
So guys, remember, this is a big benefit. Usually it's the other way around when companies are doing weird things. Now, what PE would you put on this company at the end of 10 years? What multiple should it sell for in terms of earnings and free cash flow?
I did 16, 18, 20.
So we did 14, 17, and 20. I'm surprised to hear you say 16, 18, and 20, Mo.
Yeah, I actually raised it up. I mean, if they do 12% revenue with those types of margins, I could justify giving them a 20 PE. Okay. Because that means that they become even more of a moat.
Yeah.
More people are going to them, and we're seeing that in their user growth numbers. So.
Yeah. All right, so the final line, guys, what is your desired annual return? What return do you want on this? We did 12, 13.5, and 15.
Surprises me.
Yes. What do you think?
I had 10, 12, 14.
So here's the reason.
Reasoning?
I think I'm going to lower it from 12 to 11 to 11, 13, and 15. Here's why. Guys, you can get 9 or 10% by investing in a long-term ETF, but we really beat this company up here on the low side. So I'm okay going to that 11. I just feel like there is a lot of competition in this area, and I want a little bit more buffer, a little bit more margin of safety, and that's where you get it, is by increasing your desired return. Okay. As you make your assumptions higher and higher, you should increase your desired return because that'll give you a higher margin of safety. Now, guys, I'm going to hit the Analyze button. Mo's going to hit the Analyze button. We're both going to go through our numbers. Just stick with me for 60 seconds longer. That way you can watch the end of this video. Through the end of this video, you will get our comments on these numbers because it's important if you want to learn a process to understand this. So I'm hitting the Analyze button.
Wow.
My numbers are a low of 45 to 55, a high of 120 to 140, and a middle price of 76 to 92. And if you pay today's price and the low assumptions occur, you're going to make 9.3%. The middle assumptions occur, you're going to make 18.6. The high assumptions occur, 27.6. Mo, what were your numbers?
I had 51 to 70 on the low end, 118 to 147 on the high end, and 80 to 102 in the middle. And you can see my returns right here. Pretty big returns.
Guys, thank you very much for watching our video, and especially thank you to our community members who are very active in our chat. Thank you.